Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, definitely hit like and subscribe so that you can see future videos as well. So today we're going to talk about arguably Warren Buffett, Charlie Munger, and Berkshire Hathaway's most famous investment ever, and that is the investment that was made in 1988 into Coca-Cola. So one of the interesting things that happens when you look at the Coca-Cola holding today and look back at the performance over the last 1 or 2 decades, bearing in mind that this is an investment that's been held for much longer than that, Coca-Cola still makes up right around 10% of the Berkshire Hathaway sort of public stock portfolio, and it's actually had reasonably poor returns over the last couple of decades. It's lagged behind stocks like Apple, like Amazon, and even other investments by Berkshire Hathaway. It's lagged behind Berkshire itself, and it's lagged behind the S&P 500, although it's continued to pay a dividend sort of in the meantime as well, which is something to consider. So, you know, when people first see that and they think about, you know, Warren Buffett's supposedly the greatest investor of all time, so what's he doing holding on to a company that's not providing good returns? And what's he doing holding on to a company that produces, you know, sugary drinks and presumably is in an industry that's going to be declining over time? People are less inclined to go out and buy full sugar drinks, to buy Coca-Cola and all their associated other brands that the Coca-Cola company owns as well. People are less inclined to go out and buy those, spend money on those sugary drinks that are now deemed as sort of unhealthy. So what's Buffett doing still holding on to this thing? And I want to run you through 5 reasons why he will continue to hold on to Coca-Cola, and hopefully you guys can pick up some good lessons around why you may want to do this as well if you're able to invest in a very good company over the long term. So let's get into it. So to quickly run you through some of the background on the initial Coca-Cola investment, the investment was made in 1988, and at that time Berkshire Hathaway invested $1.29 billion into Coca-Cola. That allowed them to buy around 7.2% of all of the total shares outstanding, so they became a 7.2% owner of the entire business of Coca-Cola. And without them actually laying out any more money to invest in Coca-Cola, that percentage has grown over time. So they now own right around 9% or so. I'll be putting the numbers on the screen here. Right around 9% of the all the outstanding shares of Coca-Cola. And that's been achieved through share buybacks. So basically Coca-Cola has been going out and buying back their own shares over time. And that's increased the percentage ownership from right around 7.2% up to a little over 9%. In other words, a 30% increase in the interest in the business just from share buybacks alone. And those share buybacks are an example of the business making a profit and returning capital to shareholders through some sort of avenue, through those share buybacks. The other major one, and the first reason why Buffett is not going to sell shares of Coca-Cola, is the dividend payment he gets. So he currently owns 400 million shares of Coca-Cola, not $400 million worth, 400 million shares, billions and billions of dollars of shares in Coca-Cola. And Coca-Cola currently pays out a $1.60 per year dividend. In other words, Warren Buffett is getting a $640 million per year dividend payment from the Coca-Cola investment. And if you look at that relative to his initial investment of right around $1.3 billion, it's basically a 50% return on that original investment year after year after year, and something that's likely to continue to grow, if not maintain, for a long period of time. So he's getting a massive return relative to what he actually paid up front for the business, and that's the first reason why he continues to hold on to Coca-Cola. There's going to be some other reasons and some negatives that may come in if he were to sell. So right now he's happy with looking at, you know, I invested about $1.3 billion up front. I now get back around $640 million a year. So I've had that investment paid off over and over and over again. I'm playing with house money, and I'm just continuing to get these dividend checks every single year and make big returns that way. So that's the first reason. Let's get into reason number 2. So reason number 2 is capital gains tax. That is not something that I personally have to worry about here in New Zealand, luckily, if I make sort of local investments, but it is something that I have to worry about, or that Warren Buffett has to worry about if he wants to sell a stock that he's made a substantial gain on. And Coca-Cola definitely falls into that category. So like I said, he invested around 1.3 billion up front to buy those shares in Coca-Cola. That holding on paper is now worth right around $19 billion. So if you look at the gain that's been made on that, 1.3 up to right around 19, that is about a 17.7, I think, capital gain, and he's going to have to pay tax on that. So if he sells those shares and realizes that capital gain, he's going to have to pay right around a 20% tax on that investment. So if he wants to turn those shares into cash and possibly move that into another opportunity that comes up, there's going to be a big downside to that. And if you understand the laws of, basic mathematics, if you lose 20% on an investment, you're now at 80% of your current, of your initial kind of level of principal. So to get back to just 100% to where you started, you actually have to make a 25% gain. So that's the second reason why Berkshire is not selling Coca-Cola, is a massive capital gains tax obligation if they were to do that. Right now, like I said, Buffett's happy to just sit there, continue getting the dividend, paying tax on that income, but not having to worry about tax on the overall gain that has been made on paper in terms of capital appreciation. So that's reason number two. Let's get into reason number three. So reason number three is liquidity and publicity. So what I mean by this is Warren Buffett is such a big shareholder of Coca-Cola. He owns basically 1 in 10 of all shares outstanding, and that's insane when you walk down a supermarket aisle and see a whole row of Coca-Colas and think that, for every 10 of those sitting on the shelf, Warren Buffett owns one of them. That's insane to even think about. But the crazier thing that happens when you actually go to sell those shares is it's very, very, very difficult to get out of that entire position in a short period of time. It's not like you or me where I can go and place one trade and be in or out of a stock in 5 minutes. That's something that is literally going to take years to do. We saw that when Buffett was buying into Apple over the last couple of years. It was literally a 2-year process to obtain about 5% of all the shares outstanding in Apple. He owns about double that in terms of percentage ownership of Coca-Cola. So the amount of time it would take for Buffett to liquidate those shares would just be ridiculous. And the publicity point is that as he starts to sell those shares, since Buffett is so well known and he obviously manages over that $100 million threshold, he's going to have to report any purchases and sales in his 13F filing. So every quarter, people are going to see an update on how many shares of Coca-Cola Berkshire owns. That number hasn't changed for a long time. It's been sort of nil change. But as soon as people start to see that Buffett is selling shares, they're also going to sell shares. It's going to drive the price down, and practically Buffett just isn't going to be able to get as much money as it looks like. Just looking at a stock chart and the current price, he's not going to be able to get that amount of money back practically. It's going to take him a long time. The price is going to be driven down steadily as others see Buffett selling. So that's an issue, and that's another reason why Buffett isn't selling Coca-Cola shares. So reason number 4 is there's not many better opportunities at the moment. So if you look at the current balance sheet of Berkshire Hathaway, they have a huge amount of money in cash, and they have a huge amount of money in short-term securities. So things like short-term government bonds and commercial paper and that sort of thing. Basically, those are placeholders and a way for Buffett to earn some sort of return on cash that he needs to have available to make investments should something dramatic happen in the market, should there be a stock market crash, or should some private business of substantial size come up for sale. So the fact that he's sitting on so much cash already means there's not a lot of opportunities and not a lot of value investments that Buffett sees in today's market. And it's as simple as that. If he would also sell Coca-Cola, his stack of cash would just grow. He'd no longer get that dividend from Coca-Cola, and he really doesn't have anywhere to put that money at the moment. In the earlier days, Buffett would say he'd have more ideas than money. Now it's definitely the other way around, and he has more money than ideas. So he's going to struggle to put that somewhere. There's not many better opportunities, and that's reason number 4 why Buffett is not selling Coca-Cola. Let's get into the 5th and final reason why. So the 5th and final reason why Buffett is not selling his shares in Coca-Cola and likely never will is not quite as technical or as financially savvy, I suppose, as the first 4 reasons, and that's simply that he loves it. The guy loves Coca-Cola. He's consumed it since he was a kid. Last I heard, he drinks about 6 cherry cokes a day, and he loves to be invested in things that he likes and things that he consumes. And I think that's a great message to carry across to everyone in their investments. You know, if you're not into smoking tobacco or drinking a whole bunch of alcohol or anything, don't invest in tobacco and alcohol companies. If you love Coca-Cola, invest in Coca-Cola when it makes financial sense as well. You know, invest in what you know, and that way you're going to be a proud shareholder. You're not going to have people ask, you know, what do you own? What do you own? I heard you're into the stock market. What shares do you sort of own at the moment? And you're not going to have to sort of whisper away, I own a tobacco company. It looked really cheap and I just want to make money and I don't actually like the business. You're not going to get into that situation. You're going to be a proud shareholder. If something goes wrong with the company, you're going to have a better chance at understanding exactly what that means for the business if you're a consumer of that product. So that's you know, the last reason why Buffett is not going to sell Coca-Cola. He simply loves it. He's had it for a long time. He'll continue to have it till the day he dies. And that's just, you know, that's just how it goes for him with Coca-Cola. So those are my 5 reasons why Buffett will never sell shares in Coca-Cola. He never has and probably never will. He's been quite open about that. And I hope you really enjoyed the video and got a lot out of it. So you have a great day. Cheers.